you hear me? Can you see, just want to make sure everybody's on the same page. Can you see what's on the screen, which should be the PDF, or do you see my face?
The screen.
Okay, great. Perfect. That's what we want. We want you guys to be able to see the PDF. I'm just going to go through it. We have about an hour. I'm going to try to finish up a little early. I know we were planning for about 45 minutes, so I'll try to go even shorter than that. I know everybody's time is valuable and we're in the middle of the day. And it's Monday, so everybody's trying to get through everything. I understand that. So yeah, let's jump to it. My name is CJ. My name is Chanveer Singh. I go by CJ. I'm an attorney here. Could you go to the next slide, please? So I founded Prime Legal Services, which is right up South Center or Interurban Avenue. It's right by South Center Mall. And I grew up around here. I lived all over the town there. SeaTac, Des Moines when I was a kid, in Kent. I went to Kentwood High School. Went to UW. So I'm a local kid. I used to be a real estate broker myself when I was in college. I got my license when I was like 18 or 19 and I practiced for 3 years. So I remember, and that was 2008, 2009. And that was a really bad time because we couldn't even get a hold of banks to try to do short sales or anything. So things have changed since then, but I kind of have been in your shoes and done some deals, done some commercial deals, done obviously residential deals as well. So we'll move on. So today we're just going to talk about entities. I'm going to try to give you guys a decent overview of everything, especially as it's related to real estate. I don't want to go too deep into it where we start getting confused between corporations, S-Corps, C-Corps, special purpose corps, and LLCs and all that sort of stuff. So we'll keep it light. You know, those are the three primary corporations that people use or legal entities people use in real estate or in general. LLCs tend to be more used for, in my experience, for property. And we'll get into that in a little bit here. So corporations, you know, are separate entities. You file articles of incorporation or articles of conversion if it's a LLC being transferred into a C-Corp. You identify the name of the corporation, the purpose of the corporation. You go to the Secretary of State and you file the appropriate documents and you set up what's basically called a shield of liability protection for your owners. There are some maintenance requirements. You should have bylaws for a C-Corp or a S-Corp, and you should have an annual meeting, which you should keep. You should keep separate bank accounts to protect something that's called corporate veil. I'm sure you guys have actually had some experience with this as well, since you're kind of in this real estate business. So if those things are not maintained, a lot of times that corporate veil, which protects owners. Sorry, did I have a question?
No question, CJ. Keep going.
Okay, sorry. I'll continue. So that corporate veil is what protects owners of whether it's property or business or whatever from any kind of liability that may arise in that business. So it's important that you follow those designations that are put by the state to keep that corporate veil in place. A lot of people, what they will do is commingling, for example. It's a very common issue. People will be using their personal funds in the corporation's account or vice versa, and then everything is jumbled up and that corporate veil is essentially gone because you're going back and forth. So if there's some liability and you get sued for something, they will come through the court, will pierce that veil and go to your personal accounts and personal assets to pay for those things. So that's kind of C-Corps, S-Corps. The only main distinction between, well, there are several very important distinctions between S-Corps and C-Corps, but filing wise, they're filed the same way. To create them, to create an S-Corp, you elect, I believe it's called a 280 or a 288 election to be recognized as an S-Corp. So you're taxed in a little bit different manner than S-Corp is, so that it's a pass-through entity, and if it's generally used for smaller businesses. For example, flipping real estate, you may use an S-Corp for different projects, et cetera, et cetera. C-Corps tend to go towards startups, you know, big businesses that are going to have more than 100 shareholders and are going to have a lot more potential liability or have different exit strategies. So moving on to LLCs, which is, I think, what everybody kind of jumps to these days. It seems to be very popular and very common as well. It also shields liability. It's created, you go to the Secretary of State, you file something called Articles of Formation instead of incorporation. You need to maintain an operating agreement. To have that, you need to have meeting minutes annually. Similar kind of structural things you need to do to maintain that. Again, you need to maintain separate accounts, as always. So that's LLCs, but generally it's not as complex. It's designed for smaller projects or smaller businesses that, you know, practically speaking, it's designed for businesses that are going to have less than 10 partners, you know, 5 partners, something like that, restaurants, retail, even hotels and such. So if somebody's flipping property, they will often use a LLC as well. I would use a separate LLC for every single different flip I do, but some people tend to mix that up and they expose themselves to liability. So anyway, we'll jump to the next slide, please, Guru.
Yeah, with that, I have a question, CJ, if that's okay.
Yes, go ahead.
Yeah, so with the S-Corp and a C-Corp or special purpose corp, like, so is there a different type of protection under those, or as a real estate agent, do I need to worry about those?
So it depends. It depends on, as a real estate agent, if you're the one either helping somebody set that up, or do you mean, are you
like for your own business?
For your own business, yes. Different kind of, I mean, liability, it's going to shield all across, but tax considerations are different. Your liability, for example, for unemployment tax, for federal tax, ordinary income, for something called dealer status. Sorry, I'm screwing my head up. Those things are going to matter on how you're doing that. So if you select a C-Corp, it's generally designed to be under one umbrella and do a whole bunch of things under one umbrella, right? But if you're a real estate agent that's buying and flipping property such as you do, I would not do a C-Corp. I would do a S-Corp. You start with a C-Corp, you would make the S election and have different entities that each do a flip. So your liability, if something happens at one project, isn't spread all the way across all the other projects. It's just at one. But to be honest, even in this, even simpler, I would maintain a simple LLC for every single project that you do. And that's the best, because now we can talk about avoiding unemployment insurance and double taxation, because with a S-Corp, or I'm sorry, with a C-Corp, you're going to be dealing with initial ordinary income tax, and then you're going to be dealing with a dividend too when the corporation pays you. So I would go with a S-Corp or a LLC. Those are tax considerations, which I'm going to talk about further too if you have more questions.
Okay, yeah, that sounds good. Thank you.
Yeah. Okay, so we'll go through this very quickly here as well. So where to register, there's always like, where do I register my corporation or my LLC? People have different kind of varying ideas. A lot of people you'll hear, you know, I get some clients, they want to register their, you know, restaurant in Delaware. It doesn't make any sense. It's not for them. You know, you can register your C-Corp or your LLC with the Washington State Secretary of State. You know, Washington, even though it may have a bad reputation, is actually pretty entrepreneurial friendly. There's a lot of positive things and opportunities for the corporations. And when I say that, I mean, if you go to court, businesses, the courts are not anti-business, even though that may be their reputation. They do still look out for shareholders, and they do still look out for business owners. Also keep in mind, if one of your clients wants to register, let's say in Delaware or Wyoming or Nevada or whatever, you still have to file and you still have to register within the state of Washington as a foreign domestic entity doing business in Washington state. So they're still going to have to maintain 2 different registration, and they'll need a registered agent. So if it's something simple, just have them file in Washington, they're fine. For Delaware, that's really if you have a client that is like a very big investor who buys and flips property. I mean in the millions, or if it's a startup company that's looking to get acquired by another company or that sort of thing. That's really who that's for. Because Delaware tends to have really friendly courts for shareholders. They have a kind of a robust law for LLCs and corporation protections because it was one of the first states to adopt all these things. So that's why that's looked at as friendly. Another two that come up are Wyoming and Nevada. So in Wyoming, there's no B&O taxes, and there's no annual franchise taxes right now. So if you want a franchise, a lot of people will want to register in Wyoming. And then lastly, I've also had some people ask for Nevada because they're and it's really for one reason, their public-facing website. Like if you go to the Washington State Secretary of State website, you can pretty much pull up any information about that business, especially about its owners, registered agents, and that sort of stuff. But with Nevada, the public-facing Secretary of State website doesn't offer any kind of information about who owns that entity, what kind of business they're in, or where they're located, or any of that stuff. So some people want to protect themselves in that way. Okay, jumping forward. So just depends on those what you want. For most people, Washington is just going to be fine. For LLCs or for properties investing or investing in properties with an LLC, you're going to be fine in Washington.
Got it. Okay, so as a real estate agent, we don't need to worry about going to Delaware or Wyoming or Nevada.
I again, if you have a client that's perhaps like you're helping somebody buy land for building a McDonald's, right, or something like that, or some kind of big restaurant or some big franchise, you may want to consider those things. But for land, for rentals and flips, there's absolutely no need to go all the way across the country.
Sorry, just background music there. All right, so let's move on. Thank you.
So this is, I'm going to jump through this again very quickly. These are the fundamental considerations in selecting whether you should be whether you should help your clients be a LLC, a S-Corp, a C-Corp. So it's, are you a smaller business? Are you a startup? What kind of cash flows are you going to have? Are you going to be paid in ordinary income? Are you going to be paid in capital appreciation? Are you going to be paid through dividends? Those things you need to consider, or your clients need to consider when you talk to those folks. Again, another thing is future financing and capital needs. And that goes back to, okay, sorry, my phone's ringing, guys. That goes back to, that's going to keep ringing, by the way. That goes back to what kind of future the company's planning to have. If they're planning to have a lot more appreciation and income coming in from investors, you may want to have C corporation as corporation, so you can bring that in more easily. Now, if you're going to be just using your money and maybe one other person, and you're going to be buying property and flipping it, or your clients are going to be buying property and flipping it, there's absolutely no need to go and set up a C corporation just for that, because there's no additional income coming in. Complexity, management and growth. LLCs are easier to manage. They're local, they're state entities. C corporations have double taxation. They also have double kind of the requirements of bylaws and maintenance and resolutions. Anytime you want to pass something, that's not necessarily something you want to put your clients through. Last thing, exit strategy. How do you plan on exiting? How do you plan on exiting that business that you have, whether it's an investment as a real estate agent in some land, or one of your clients is buying that property and flipping it, versus one of your clients is a big franchisee and they want to build 4 McDonald's and then exit by selling it to the regional McDonald's franchise. Then if it's the second McDonald's example, then you might want to have a C corp. But if it's the first example and it's a smaller flip, there's no need to go again for the big corporation.
So can you change it as your time goes by and then your needs changes? Or are you like set in one type of LLC or structure and then you have to like restart or get a new one up and running and then move over?
So with LLCs, you're not stuck. If you start and establish a LLC, you can. I've done this for several clients where they started their business as a LLC, and then we go to the state because they realize their business has grown more than they anticipated, right? And then they switch. We file articles of conversion with the Secretary of State, and we turn that into a C or an S-Corp. Generally, we turn that into a C-Corp, and then they make an S election for tax reasons if they need to, but their businesses have grown so much that they've decided, okay, instead of running this as a LLC, let's just do C-Corp and then have partnership shares and percentages and all that sort of stuff. So short answer is yes, you can convert, but if you start a C-Corp, you can't convert into LLC.
Okay, thank you.
Okay, so tax considerations. So this goes back to kind of what we were just talking about, tax considerations and money and capital appreciation issues and all that sort of stuff. So how does the business owner plan to take money out of whatever their venture is, right? So if they're going to be doing a C Corp, more than likely they're either going to be taking money out through the company's going to make money. The money's going to eventually get passed down to the shareholder. And there's going to be two taxes. There's going to be tax at the corporation level, and then there's going to be a tax at the individual level when they get a dividend down to, or a profit distribution or whatever. That's going to be taxed onto the partners or shareholders' income. So you're getting double tax there. So it really depends on what you want to do. And then you're also dealing with unemployment tax, self-employment tax, and that's another, I believe it's 15.4 or 15.8% that you'll have to pay on top of that. So you really have to think about what are you doing? Why are you doing it? It's hard for me to give a ton of examples because each particular thing is different. But if, for example, in your guys' case, if you have somebody flipping property, I would do a LLC, all right? I would not do a C Corp. With the LLC, you immediately avoid 50% of the double taxation, right? Now you just have one tax. And then I would make the election to become an S corporation for tax reasons. So you can be a LLC that makes an election to be taxed as an S Corp so that you're taxed very differently. So you're still going to have to pay some tax, but we're going to be avoiding quite a bunch of it. And while maintaining the same level of protection, as long as you follow all the guidelines for keep maintaining your corporate veil.
So is it, sorry, so so can you like change it whenever, or is there a certain time you have? Let's say if you just started out the LLC and then you're like, okay, well, 6 months later, I want to do S Corp. Can you do that, or?
That's a good question. I believe there is, I think it's 90 days, 90 or 180 days that you have to make the election within a certain time for the S corporation. Yeah.
Okay.
But I'll have to check and make sure that those days are correct. I don't remember off the top of my head, but I believe there is a time period that you have to make the certain election. Right? So I'll just run through this again. Another issue that I've seen, like, will profits be retained to fund capital expenditures and growth? So if there's a company that's making phantom income because your value is appreciating and it's not designated properly, it's not elected to be a S Corp versus a simple LLC, even though you may not have income because the entity is going to be seen as a disregarded entity by the IRS, that income is going to be designated to you as a partner or as a shareholder or whatever, and you'll be taxed on that. So you have to be very careful how you set that up, and make sure that that entity is not being viewed as a disregarded entity or a pass-through entity, as they say. Last two things here, are we expecting significant losses, which sometimes can be intentionally useful to clients. I'm sure you guys have clients who are property, flippers and such, and they may want to take intentional losses and maintain them on their books so that they can use them against something else to offset their income or gains on another property. That may not be the issue right now because everybody's doing well and property is through the roof, but at a time especially for people who may have too much income. They may want to intentionally offset their income. Okay, and then last thing here. So we have qualified small business stock exemption. I'm not sure whether this will apply to a lot of real estate agents, but essentially what this does is it allows certain qualified businesses to basically not include or not pay tax on part of their purchase price. So if they sell a business for $1 million, they may only have to pay tax on $700,000 of the actual gain, and the other $300,000 is exempt. But that's again for people or businesses involved in IP and not necessarily service providers such as you and me, actually. I think you guys, again, I'm not sure how familiar everybody is with entities. I wanted to make sure that I kind of provided a good overview of how they work and who's all involved. In corporations, for example, we commonly have 3 different folks that are involved. We have the shareholders, who are the owners of the company. We have board of directors, who are hired by essentially hired or designated by the shareholders to run the company or to manage the officers, which are appointed by the board of directors. LLCs have flexible structures. Sometimes they can get overly complex if you start doing too many things between one, but generally it's managers, and members. There's 2 different types. It's voting and non-voting. The interesting thing about it is you can have different variations of profit distribution. So Guru and I can be 50-50 on a LLC, but because we agreed that he does more of the work on a certain deal, okay, Guru's going to take 75% of this profit. Now I'm going to take 25, and that's okay, and that's allowed here. So let's see here. And then lastly, the equity compensation stock and stock options are paid and used for corporations, larger corporations, and profits and interests are used for LLCs. Okay, so I think we ran through this already. Filing articles of incorporation, documents, you go to the state, you file these documents. Whoever your clients are, you guys may have clients in different cities and different counties. Or they're doing flips, they have to go to that state and they have to go to that city and get their license so they can move on. If they're planning to operate additional things within, let's say you're selling a liquor store or something, or you're selling, a liquor store with property, and one of your clients is buying it, you want to make sure that the individuals, so I would put some kind of a contingency in your PSAs in those deals, that the buyer can actually go on and qualify for those licenses. Not everybody's going to be able to get that license. So you don't want to have somebody who's, got 15 DUIs and then they're trying to apply for a liquor store license after they've already purchased it and you helped them. And now they're going, hey man, I've purchased this property and this business for $500,000, but I can't run it. I can't even get a license. So they're you have to think about those things and put those in the PSA if you can. Let's see here. Last thing, federal employment identification numbers, EINs are always kind of preferred for any kind of LLC or for a C-Corp or a S-Corp. It's very simple. You go online to IRS's website and you can apply for it, and it gives it to you right away generally. If you do it right, you want to make sure you have all your information right. And banks will require to maintain separate accounts. You can use your Social Security, but if you're going to be running, flipping property or whatnot, you want to make sure, again, we separate those 2 bank accounts. And one bank account should run on your personal Social Security, which is yours, and one should run on the EIN number that you establish for each one of these LLCs or S corporations. It's very easy. It's cheap. It's totally worth doing to protect yourself. Okay, and then I made this chart for you guys. We've used this a little bit before, and I'm not going to read through all of this. I'll just give you a couple minutes to kind of look at it, see if there's anything that sticks out or looks weird. It's basically sole proprietor, LLC, corporation. There are different methods, their advantages, their kind of pros and cons, tax treatment, how all of these things are taxed, and then required documents to set them up. You know, feel free to use this if your clients, you know, ask you, hey, what documents do I need to file, blah blah blah. You can give this to them, and they should be able to do it on their own. Hopefully, we'll see. You know, sometimes it gets a little bit complicated.
Yeah, I got a question on this one. Is so if I am just starting out as a real estate broker, and then, you know, I got a couple of deals going on or whatever. So why would I want to open up an LLC? Why can't I just keep doing on my own? If you would just go over that a little bit.
Yeah, absolutely. Yeah, I appreciate the question. That's a good question to answer, actually. Well, number one, for liability protection, right? You said as a broker or as a property flipper?
As a broker, and then we can get to the flipper late in a little bit, because I know there are a couple of people on here that do that too. So
sure. So there's several advantages. I mean, I'll jump to basically, if you're doing business as a sole on your own, and you're the broker, one, you're using your personal bank account for all your funds that are coming in and out, right? Two, you're using your bank account for expenses. If you show 20 clients in a month and you drive them from here to, Olympia or something, and the fuel you use in your car and all that stuff, none of that really, you can try to expense it, but it's very difficult because it's not organized. If you set up a separate LLC, very cheap, very easy to maintain, right? That gives you a separate bank account. And now that allows you the ability to expense a lot of your costs that you have to run your business, whether that's your phone, right? Whether that's your phone bill, that's your computer, that's your car, for filing tax purposes. And when you get paid from your brokerage or whoever you work for, they're going to be able to write a check to your LLC instead of directly into your name. And if there are additional issues later on, let's say you sell, I'm in the middle of litigation with another client where the real estate agents are involved because there was some issue in the sale. Anyway, somebody's getting sued. Now it's your LLC that is getting sued for maybe a mistake you made. You didn't do it intentionally, but you can now go and buy, umbrella insurance policy for $100 a year for $1 million, and that'll cover any issue that might come up. And that's something I would also encourage you guys to go do. But if it's if it's all on your own, now everything is liable and everything is open, including anything in your bank account, your personal assets, your car, your home, any property you might own in your name. So all of those things come into issue. So that's a big, big advantage of just setting up an LLC. And then again, maintaining the difference. Don't commingle your funds, right? Pay yourself, collect money, put some in there, pay the expenses, et cetera, et cetera. Like for example, with the car or your car payment, phone bill, let's say you work out of your house right now. A lot of people are working from home. It is a lot easier. Let's say we'll keep it simple. Your house payment is $1,000 a month, right? And your house is 1,000 square feet, and you use 250 square feet of that for your office. That's your office. That's where you work out of. You can write off as an office expense $250 per month, right, as your business expense. So it absolutely makes sense to set that up. And IRS will look into that, but it's very common practice, especially nowadays with work from home options and all that sort of stuff. So many positives to setting that up. Did I answer that? I kind of dove headfirst into that one.
Yeah, no, thank you. No worries. I know you mentioned umbrella policy, and then the one question coming to mind is that when you said that it's beneficial for you to have separate LLC for each separate flip that you do. So, I mean, that's a lot of paperwork and a lot of work involved in opening another one. So should you have the same EIN for the same one or different one, or can you then also get umbrella policy to cover everything and still only have one LLC to do the flips on multiple properties?
In short, the answer is yes. So you can have, let's go step by step. You can get one umbrella insurance policy. Umbrella means everything, covers everything that you're doing. So get $1 million, get $2 million. It's extremely cheap. And depending on how big of flips you're doing, how much money you or your clients have invested in there. And because, when you're doing flips, things happen, people get hurt on the job or this or that. So you want to have that covered. I would still recommend for each flip, each property, you should have a separate LLC to maintain and reduce liability. But there are things you can do with a C corporation where LLCs are actually partners, or S corporation, where LLCs are actually like kind of shareholders of the C corporation or the S corporation, and they're doing different flips. And then the overall, the whole company is kind of the C Corp is actually looking down at all of the little flips. But again, umbrella is number one. I would recommend all of you guys to go and get that. We see that all the time where people are, you get in a car wreck or somebody hits you or you get hurt or whatever, or your kid gets in a car wreck. You want to have as much umbrella insurance as you can, really.
Hey, thank you. I'll just move on and then.
I'll pause here briefly. Is there any other quick questions from anyone else that'd like to jump in, or should we just do them at you got somebody, I think.
Yeah, David had his hand up. David.
Hey, thanks, CJ. Thanks, Guru. I have a question about the corporate veil protection. If we have separate bank accounts, we've got the LLC set up, it's S-Corp qualified, all that, we've been managing all that, but we're not doing the annual meetings officially and keeping those minutes. How critical is that piece to the corporate veil protection?
David, that's a good question. The biggest issue that we see, at least in court, that causes the corporate veil to be pierced is commingling of funds. And people don't do it intentionally. It's just they don't want to think about it. They don't want to use a separate credit card for their business or something, and they pay it out of their personal account, and that's where we have the issue. For a LLC, keeping the minutes is not going to be as crucial. Again, I'm not saying don't keep them. You should keep them, because that is a point or a factor that goes against you in protecting the veil, right? But if it's a corporation or an S corporation, you should keep them. It's very important, right? Because we're asking the court and the government to treat S or C Corps as a completely different entity from you, as we are with LLCs, but especially with a C and S Corp, where we're saying, hey, this is a huge separate thing. It's not me, right? So I would keep minutes. One way that's easier to keep the minutes is whenever this is something that everybody struggles with, the meeting minutes, because they forget, right? So what I would do is whenever your renewal is due, set your annual meeting for that week, and just, a couple of days before, sit down, fill out the paperwork, have one letterhead, and say we held a meeting and everybody was here, and we didn't change anything and business is growing and done. And you just submit that along with your renewal for the state.
Great. Thank you. And the second question on the individual properties. In the past, I've heard that using a limited partnership setup is suggested for each individual property rather than a separate LLC. Is there a change in that? You think that's limited partnership versus LLC?
Yes. Hang on a sec. That's another good question. Okay, so with limited partnerships, as you'll notice, with lawyers, dentists, clinics, accountants, there used to be a lot of, you'd go to a law firm and, for us, like Prime Legal Services, LLP or something. But the state, whether intentionally or not, has kind of, it's still there. You can still do it, but the protections are better and it's easier to maintain with an LLC. That's why you'll see us, like even my firm is Prime Legal Services PLLC, right? It's a professional limited liability company because there's better protection. So in the past, you're right, they did used to use limited partners, but now it's better and easier to actually go through a LLC, because with a limited partnership, you have a lot more issues if you try to make an S election. And then when you're paying taxes, the Schedule K is very complicated. And then there are also capital account maintenance requirements. Do you know what I'm referring to?
Not specifically.
Okay, so capital, I'm going back to law school. This is very nerdy, but essentially, when you do a general partnership or a limited partnership, when you start, everybody says, and the accountant is, again, this is why it's more burdensome to maintain a general partnership or a limited partnership. The accountant has to ask everybody, say, okay, how much did everybody put in? Okay, we each put in $100,000. There's 4 of us. All right, great, $400,000. And then as those expenses ebb and flow, each one of those has to be designated to each person's capital account.
Sure. Okay.
And it's extremely burdensome. It makes no sense.
Yeah.
And that's how they used to do it. Now it's a little bit better and a lot more easier because you can do a LLC. Everybody invests their money. You go invest, you go do the deal. We made this much, everybody gets their money and you leave. Right? So there's a lot fewer kind of maintenance requirements. Capital account maintenance is one of the things that brought me nightmares in law school. It's very difficult to maintain. I would not recommend doing that. So anyway, thank you for your question.
Thank you.
I believe Nitin had their hand raised. If you want to unmute yourself and ask a question, and then I also have another question from the chat.
Yeah, I think one question I had was about that meetings requirement. So I'm a sole proprietor, so I'm trying to understand what I have to do in terms of meeting requirement. And second question is, so I get my EIN from IRS site first and then apply for LLC in the state. Is that the steps I'm doing?
Sure. Thanks for your question, Nathan. So meeting minutes and EIN. Okay. So meeting minutes are very simple. Oh, give me one moment, guys. 1 second, please. Sorry, I just saw the questions tab, the chat tab, so I'll keep an eye on that too.
I got the questions tab, CJ. So when you're done, I'll read them out to you.
Okay, fantastic. Thank you. Sorry, I didn't see that before there. So with meeting minutes, it's very simple. Okay, once you have established an LLC or a corp, you sit down. You know, if it's just you on the LLC, you would write up. What you should have is a letterhead document with your corporation or your LLC's name on it, and you sign up with everything that you need, and you state basically that you're having a meeting, the date of the meeting, the time, and that all the members are present, and what you decided. If there's any changes, if there's no changes made, you can literally write no changes made, annual report to be filed on so-and-so day. As I was saying to David, you know, do it right around that time. So that's a very simple document. It's not overly burdensome. You can do it in, you know, in an hour. EIN and operating agreement, I'm sorry, filing the articles of incorporation or the articles of formation. You can go, you know, I'm trying to remember the steps actually myself. If you go to the Secretary of State's website, you can file and set up everything. Then you can go online and using that entity that you've set up in the state, now you can file an EIN number for that entity. And you give the proper address, you give the registered agent, and you give the proper name for that entity. And then you can go from there. And then before you set up like a Department of Revenue business license or whatever, when you go over there, they will ask you for an EIN number and you have to provide that to them. And then they'll give you a UBI number. I know there's a million numbers that you have to kind of remember, but that's kind of the step-by-step process.
Okay, thank you.
Yeah.
Thank you, CJ. And I think the chat questions were the same as a single member. How do they keep track of their meeting notes?
Yep, same thing. Yep, same thing. Have a meeting with yourself. You know, if you're really excited, you can sit by by a mirror and talk to yourself. You know, you don't have to, but you could.
Could you take the members out on a lunch and then expense that out?
Yeah, absolutely.
There you go. Just take yourself out to a fancy restaurant and have a meeting with yourself and get
just have a separate bank account. And if you're using a debit card, use that bank's debit card. If you're using credit card, make sure that credit card is only being used for that business. Anything you buy with that credit card must be for that business, which makes it a lot easier for your accountants to maintain and look through an expense.
Yep. Yes, Edgar, that was the question. So just like CJ said, get your LLC done first and then go get your EIN. Okay. Do you want to go over a couple of slides and then we'll open up for questions again?
Sure. Okay, what we got here? Okay, so this is going to be probably, I tried to make these slides, just this slide in particular, just for you guys. Investing in real estate, I kind of have a rule that I try to follow. So for long-term investing versus short-term investing, okay, you can use either. It's just kind of a easy slogan. You can use a LLC for long-term investing. When you buy a property and you hold it, just put it in the LLC. It's going to be your rental. That's fine. You know, buying property in itself is inherently brings along a lot of liability, especially if you have renters. They may, you know, damage stuff. They may break the property, et cetera, et cetera. I'm sure you guys have had it. Or they may not pay rent. I mean, according to what we're doing right now, you know, what we're going through right now. So that's a very simple way to fix that. You don't need to set up a corporation or anything. For short-term investors, LLCs are okay. LLCs are actually excellent for separate entities for each different flip that you do. And then you can make a S corporation election for tax purposes. Sorry, excuse me, guys. For example, if you're flipping, you know, you're probably likely going to get, if you're flipping a home, you're probably very likely to get designated as a dealer status by the IRS. And that's going to take away a lot of advantages that you can generally have. If you get designated by the IRS as a dealer status, there's no, your capital gains tax rate is different. Your depreciation deductions go away. You know, you have issues doing a 1031 exchange. There's a lot of issues that come along with that. So I would maintain separate LLCs, and I would elect them to be a S-Corp, so that I can maintain my liability protection. I can reduce my double taxation immediately by being an LLC and bringing it down to a S-Corp. That's two. Let's see if there's anything else I'm trying to remember here. Yeah, those are the kind of the two main advantages, and that's kind of what I follow whenever I do or advise clients on multiple flips or multiple flips going on at the same time with different entities. Okay, LLCs for rentals, complex tax. Yeah. Okay. And then last thing I would mention is the self-employment tax liability reduction. If you make a selection, that will also bring that down, and you won't be liable for all your earnings you won't be required to pay self-employment tax on all of your income, because some of your income will be paid by, let's say, a check or a monthly payment or your wages, and some of it will be paid as profits at the end of the year. So, you know, if you made 150,000, if you pay yourself a, like the IRS calls a reasonable salary, which means not too low, and you pay yourself $48,000, $50,000 a year for your work in that LLC that's been elected as an S-Corp, you'll be paying self-employment taxes on that $48,000. And then the rest of the money that you made, the other $102,000, will come in as profit, and you'll pay ordinary income tax on it, but you won't be paying self-employment tax on it. So there's another major bonus to being designated an LLC with an S election. Okay, let's see here. I think that's about all I have for now, guys. We're right on time. It's 1:45. So I tried to finish that up as quickly as I could. Any questions? Anything you guys would like to talk about? We have a few extra minutes, I think.
Yeah, anybody have any questions? I know I have mine, but I'll have everybody else answer them, because mine are more my personal selfish questions, which I can call CJ anytime. But what's your email? I will have Goldie forward the slide to everybody after we're done. So Deidre, everybody will get that. So his contact information is in there.
So LLC and S-Corp are not. Susan, I see your question. So let me clarify again. There are C corporations, and then which are federal entities. Okay. Then there are LLCs, which are created by state laws. Okay. An S election, an S corporation election, it's a different kind of corporation where you do, and it is mutually exclusive, but what you're doing is you're setting up an LLC in the state, and what you're telling the federal government to do, the IRS to do, is, hey, even though I am an LLC, please elect, I'm requesting to be taxed as a S corporation, which gives you that step above to avoid, or to reduce rather, your self-employment taxes. So they are different, but for tax purposes,
Okay.
in the eyes of the IRS, you're an S corporation.
Okay. So thank you. I mean, I do have an LLC right now. I'm still a fairly new agent. But I believe I was told I couldn't do the S-Corp until the beginning of the year. Or can I do it now to affect my earnings in 2021? Or is it?
I would have to, Susan, I would have to look at your articles of formation when you form,
Okay.
and I would have to look at how you've been maintaining your documents, how you've been maintaining your separation between yourself and your LLC. You may have missed the time period to elect as an S corporation for the
That's
year.
what I was thinking. Yeah.
Again, it's
I would say that for me, and then before I say this, I'm not a CPA and I'm not a lawyer, and this is not legal advice. So consult with CJ. But what I did was that last year when I created an LLC, and then we were not sure if we were going to make it a C Corp or an S Corp. So we made that election at the end of the year by filing, I don't know what forms we filed with the CPA, and along a letter, including like, oh, we forgot. And then we sent that letter to the IRS, and we were then changed over to the S Corp, and I was able to do that. I'm not suggesting you do that, Susan, or anybody else. Consult with your lawyer and your CPA before you do that. But like CJ knows and everybody else, I like taking risks, and that was my risk, and I did it anyway. So
Okay.
I know CJ's got like a bunch of flags going up in his head, but
yeah. I'm
yeah.
going to pull back on that. Just again, I was like, he's right. There are those options, but it goes by each person's facts. I have to
Correct.
that's-
Correct.
But we didn't hear that from you. That's what you're saying, right?
Yeah, that's why I said this is not a legal advice.
Uh.
Consult with your lawyer and your CPA before you do this. But yeah, anyway, moving
Okay.
on.
Cool. Thank you.
Most welcome.
Does anybody else have any questions for CJ?
AJ, I got a question.
Yeah.
When you were saying about using a different LLC for every flip, is that only for people that are doing multiple flip at the same time, or to have the coverage? So then you're not, the liability is not going after both of the properties. If you're doing one flip at a time, is it still a good idea to open it and close it, or just keep the same LLC?
Yeah. You want to open and close, and you want to have separate LLCs, because part of having separate LLCs is dissolution and concluding the business of that LLC. So if liability comes from that LLC at a later point, you're still not in business in that LLC. It's been dissolved, right? There's nothing somebody can go after. So I know everybody, nobody wants to deal with the extra headache of filing an LLC all the time and this sort of stuff. But in the end, if you do 4 flips a year and you do that for 10 years, you've done 40 different projects, right? Now you have a lot of potential liability for who knows, somebody moves into a house and there's an issue or whatever. So you don't want that always attached to you to that same LLC. So if I were you, I would open and then dissolve after I'm done, and start the next one. Just name them simple things. CG1, CG20, whatever, and kind of go on that base. So in short, yes, you want to open and close it.
Thank you.
So just a follow up on that. So then this could be more a tax related question or a bookkeeping, but then do I then open and close all these different accounts, or do I have the mother up here and then you got all these 20 different children with 20 different LLCs and you maintain one account?
Safest bet is to have separate accounts. Okay.
What you're saying is I got to do a lot of work.
Yeah, or you got to have or you got to have a, one person who's essentially just charged with bookkeeping and is opening and closing all of these accounts, as well as bank accounts and LLCs.
I see two hands, so we'll go Nitin and then we'll go to Jake.
Yeah, hi. Quick questions. I'm on the Washington Corporations site, and there are three things: Washington LLC, foreign LLC, and professional LLC. I guess you mentioned professional LLC is for IT, that kind of group?
That's professional. The PLLC is really for attorneys, doctors, medical clinics, accountants. For you guys, I believe you'll be a general Washington state domestic LLC.
And the fee is saying is $200. So that's kind of just one-time fee. Like, do I have to pay something every year to maintain my LLC?
That's the fee to file articles of formation. I believe it's $75 or $100.
Okay.
That you have to pay annually, something close to that.
Every year you pay something.
Yes.
Okay.
Yes,
Okay,
but remember, Nitin, your license, your articles of formation, your annual renewal, all those fees associated when you have a separate bank account, and these are going to get expensed against your income.
Right.
So it's a business expense, so that you're not paying more tax on it. So that's why it's important to kind of maintain all those things separately.
Okay. Thank you.
You're welcome. And then we have Jake.
All right. Hey, CJ, thanks for answering all our questions today. Our question is about the LLCs and being taxed as an S-Corp. So you had mentioned if you're going that route, you can pay yourself a salary. So let's say your business is making $150,000 a year, and you're paying yourself $50,000 as that salary. The other $100,000, does that have to stay in the business as business profits, or can you disperse that money to you later? What happens to that $100,000 when you're avoiding the self-employment tax?
It depends on what you're trying to do. Okay.
I'm trying to pay the government the least amount of money.
I got you. I understand. So the short answer is yes, the money stays in that separate bank account that you have for your LLC until you disperse it. Okay. At the end of the year, you're going to be, whether you disperse it or not, that's going to be ordinary income that you have to pay federal income tax on. Right. But yes, you're right. You can do, $150,000 in income, and you can do, or in total, I guess, net revenue, and then you can do a $50,000 salary in income to you, and then $100,000 profit distribution at the end of the year. And you will pay $50,000. You will pay self-employment tax on that $50,000, and not on the rest of that $100,000. But keep in mind, the IRS does require that you pay yourself a reasonable income, because what a lot of people try to do is they try to pay themselves $5, right, and say, no, I don't make anything, and that's just it's not reasonable. And then if that's the case, your entire income will be, or your entire revenue will be seen as designated as a salary, and then you'll pay self-employment tax on $150,000. So money does stay separate. Eventually it does come to you. Whether you disperse it or not, tax does get filed on it for federal income tax, and only self-employment tax on your salary.
Okay. Perfect. Thank you.
Do you have to wait till the end of the year to give yourself that sort of bonus?
You don't have to. You can pay yourself that then. You can also do the opposite and not move that money out of that account for 3 years, right? But
Okay.
that doesn't matter. The IRS is going to charge you tax, federal income tax, on your annual, however you file. If you file on a calendar year, at the end of the year, December 31st, for this year, 2021, your tax on that income for that calendar year is due on April 30th or whatever it is, April 15th. So it doesn't matter when you pay yourself. It's been designated and allotted and allocated to your LLC. in the eyes of the IRS.
Yeah, we have like 3 minutes left, and I know there's a lot of questions that you guys have. So I'll send you CJ's info. If you have any questions, send him an email. Remember, he charges by the hour. I don't know how much he charges, but just for this class, it'll be escalated because my commission is in his charges for that. So just keep that in mind. But anyway, CJ, thank you for coming, and thank you everybody else for coming. We will have the recording out, and we will also send out the PowerPoint with CJ's contact information to everybody.
Thank you, guys. Appreciate you attended.
Thank you, CJ.
Bye.
Bye.